Following the introductory presentation of the Innovation Fund Small Scale Call, let's now try to connect the worlds of finance, innovation and industry, and discuss how a new world could look like. My name is Roman Dobrava. I am a Deputy Head of Unit in DG Klima, and I have the pleasure to moderate the session. Let us join us, Christian, with this roundtable discussion, where we will look into how the Innovation Fund can foster innovative small-scale projects, what are their characteristics, what are their challenges, opportunities, and ways to design, construct, scale-up innovative low-carbon investments. But before we go to the discussion, a couple of remarks for the audience. For those who connected later, you can send your questions and vote for questions that you would like to discuss in Slido. The event code is #IFSS, Innovation Fund Small Scale. Please indicate in your question to whom your question is addressed. This event is web streamed, and the recording of the session and the video will be published on our website. Okay, let's get started. It is really my pleasure to welcome a very distinguished panel today, very good experts that accepted to join us today. And we have Diego Pavia, who is the CEO of InnoEnergy, and I think is probably known to many of you already. Diego will have to leave soon, so he will be then replaced by Baptiste Bouet. Welcome to Nicola Rega, who is a Climate and Energy Manager at European Pulp and Paper Industry Association. Nicolas Stéphane from ADEME Investissement, which is a public sector investment vehicle in France. Mr. Rob van der Meij, partner at Capricorn Partners, who is a private equity investor. And Alessandro Boschi, who is the head of the division for renewable energy at the European Investment Bank. So before we open the questions for Slido, I would like to give the floor to our panelists for short introductory remarks. I would like also to hear your reactions, your first reactions on the presentation of the call for the Innovation Fund. So let us start with the clean tech startups with Diego. Diego, the floor is yours.
Thank you very much, Roman, and good morning to everybody. So, 4 slides to answer to the questions that Roman has put forward to the panelists. And the first one is about the credentials of InnoEnergy. As Roman said, maybe some of you knows about InnoEnergy. What we do is basically we invest and support early stage innovations. So since 2010, we have done 5,000 cases scrutinized. We have invested in 150 write-offs, so they never make it, but 300 going strong. And is today their products selling to the market. And basically what we do is that we make the cases happen earlier, in commercial terms, bigger in terms of volumes, and de-risked. As an example of our portfolio of the 300 assets, I've put against the objectives that today we have as Europeans, although we know the discussions for increasing from 40 to 55, 30 to 37, and so on, and across the simplified energy value chain. And as you can see, most of our assets under management, where we have an equity positions, they are capex heavy, they are capex intensive. So not only we're not afraid of capex intensive, we are extremely happy and knowledgeable about how we can make the cases happen earlier and bigger and de-risked. And it's also about an industrial relevance. So if we take the substructure of WindFloat, that also was a NERF 300 supported innovation, then, as you know, Europe in the national energy economic plans, we have pledged like 30 gigawatts new per year until 2050 to reach the 2050 near zero carbon economy. So that means that can multiply several times because of the ambitions of European players. If we go to wafers in PV, the same 20 gigawatts pledged per year by the national energy economic plans. So industrial relevance all across our portfolio. By the way, our first unicorn, Norvolt, we landed it last year. Norway has also been supported by the EIB, both in their innovation ADP as well as in the commercial loan type of products. So again, capex intensive, industrial relevance with jobs and growth. That is what Europe needs today. What is our, I would say, differential approach to compared to other guichets or instruments? Is that we are innovator-centric, innovator and business case-centric. So we are not instrument-centric. Where we stick the innovator, the business case at the center, and we identify what they need to bring their business case to bankability and to commercial stage. And there are many dimensions that they need. Those services that they need, they can be provided by many players in the European or non-European ecosystem. And of course, money is important, but it's not the only thing that those innovators need to make, again, the business case commercial. They need all those dimensions. And what we do as InnoEnergy is that, because we are early stage investors, from the very early days, we partner as an equity holder of those innovators in their journey, and we help them to leverage all the support measures, that are public or private. Customers, we bring suppliers, we help them in the governance, we have them in building their teams with the right profiles. So it's a portfolio of services that we deliver to those innovators. And we do this through the ecosystem that we have built over 10 years. And why the ecosystem is today a very dynamic one? Because again, we have got 300 cases of those cases. So all in all, what makes us a big difference is that we are early stage investors. We see this as a long journey. So it's not about one project, it's all the projects that were from the innovative stage to the commercial upscaling. And we leverage the ecosystem to serve the innovators' business case in all their needs. The lessons learned after those 10 years and 300 cases of our top 5 features of disruptive innovation in clean tech. The first one is we believe much more on industrial entrepreneurs rather than on incumbents. Incumbents, they will never disrupt. Why? Because they have a balance sheet to protect, they have cash flows to protect. So disruption will come always and mainly from challengers, it's not always. Out of the 300 cases, only 3 come from incumbents, 297 comes from challengers. The second lesson learned of disruptive innovation in clean tech is that technology is not what makes you different only. It's also all the other dimensions. And the team is key. Again, we are at the stage. And the second, regulation. As you know, in energy, regulation kills or creates markets. Increases or decreases the appetite of the investors. So regulation, not only in terms of stability, but also in terms of fragmentation in the European market. The first thing that we do when we decide to invest or not is to see whether the regulation is the same across the 27 member states or is different. If we see many colors, we do not invest because then there is no scalability. So again, all those dimensions are critical to be, all of them, supported. If any of them just fails, the case will never be commercial. And as you know, the NIMBYs, the number 4, is critical in energy. Number 3 is the long-term monetization. And that is when we seek for co-investors, is about patient capital. It's about people willing to stay for 5, 7, 10, 15 years. It's not the typical 7 years turnaround of a portfolio of VCs. So that's why the investors are a bit different. And it's capex heavy. So the investors, the public sector there plays an extremely good role. And this small scale new product launched by Innovation Fund is extremely useful, is a special type of investor that we need in the early stages. But all in all, as Europeans, the structural payout is huge because it's high job creation and its resilience going forward into the market. And my last slide is a bit judging, assessing this small-scale innovation fund. If we look at the innovation and market uptake value chain, we are in the yellows, what we're discussing today. The extremely good news is that there has never ever been a higher certainty for investors and industry to invest, and thanks to the Green Deal and the national economic plans. So there is never been before so predictive. The public instruments, I think we are extremely well equipped in Europe, and the Innovation Fund, small and big scale, is absolutely fit for a purpose and non-dilutive, together with the dilutive of the EIB product. So it's perfectly in what is needed. And we have on the private side the different other actors. So it's about all of us working together to make those cases happen. And where we operate as energy is there. So we are early stage, and so we're perfectly hooked into the ecosystem to make those cases happen. Thank you, Roman. Back to you.
Thank you, Diego. This was a really nice intro to the debate. I liked a lot your analysis of the challenges that these projects are facing, but also explaining the whole connections between projects, financing, and the setup of the project within its environment, whether it is technical, regulatory, or commercial. So with hearing all these multidimensional challenges, team, regulatory, supply chain, tailor-made financing, I'm sure that our following speakers will want to react and join the discussion. I would now move to industry, and pulp and paper industry is the sector with a lot of innovation happening. You know, if you start with packaging, ending with the waterless paper and so on. So Nicola, please, the floor is yours.
Yes, thank you, Roman, and good morning to everyone. Thanks, DG Klima, for the invitation. This is indeed a very important moment today when we are preparing for the new call. Just a few words for the ones who are not familiar with the pulp and paper industry. We are the fourth largest industrial energy consumer in Europe, and with, I would say, a red carbon footprint. We are responsible for a bit less than 1% of EU emissions. Since 2005, we reduced emissions by almost 29% between 2005 and 2019. And we see the challenges ahead in how do we keep on further moving on. We have a positive trade balance with the rest of the world. Despite having very tough competition, we are still a good example that I think shows also European leadership, where we can lower our carbon footprint while also being able to compete globally. So we look really forward for advancing even further and go to what we are all aiming for, which is a carbon neutrality by 2050. Our sector has been, since the very beginning, extremely supportive of the Innovation Fund, starting with the extension of the famous NER 300 to the Innovation Fund to open up for industry. And we've been always engaged since the beginning, trying to make sure that all the rules are really going to support industry. And we are really happy with the final outcome of the Innovation Fund as a whole. And we're even more happy with the upcoming call on small-scale projects. And the reason is it has multiple dimensions. First of all, it opens up to a lot of new solutions that are, because of the scale of the projects, which are a bit smaller, then it also means that there are relatively lower financial risks. And that also opens up for a new set of opportunities also for small and medium enterprises. We often talk about the big industrial sites, but let's not forget that the installations in the ETS are roughly 11,000. And we need to make sure that all these installations have the possibility to have options on the table. And we need to stimulate so that nobody is left behind. So that, I think it's important. In our sector, about a bit more than half of the installations are small and medium enterprises. So it's really, it opens up a lot of possibilities. But actually, what is even more important than this, it might sound surprising, but there is a hidden message in these small-scale projects, which I think it's really worth highlighting, because it might not make to the highlights, to the big titles, but I think it's probably, this is the call which, among everything, has the potential of really being a game changer when it comes to a large deployment of solutions. And that's because it's opening up to what we call innovative modular technologies. So let me try to explain a bit this concept for the ones who are not fully familiar with it. We often, when there's kind of a simplification when it comes to understanding what does it mean innovation in the industry. We tend to focus on the idea of our large-scale projects, which are tending to end up in, I would say, often as a total rebuild of the site or reinventing from scratch the whole system. Now, this is it's absolutely important that this goes through. But if I look at my sector, for instance, we have 900 paper mills in Europe. Assuming this revolutionary technology comes up in 2030, we have 20 years to roll it up across 900 paper mills, which makes it, if you do the mathematics, 20 years, 900 mills, it makes almost one total rebuild a week for 20 years. If you say, okay, there's not let's cut it by half, still it makes a total rebuild every 2 weeks, which is extremely challenging, both financially, both from technical point of view, both from resources. So we need to keep that in mind, but we also need to work into modularities, meaning solutions which can be implemented in the industrial site that can be bring innovation in a way which can be fit into the new into existing sites, and if that works, then it has a huge potential for rolling out, and therefore a single project has the potential of quick implementation because everybody understands what it is. Everybody can see how these new solutions, which is totally different but can still fit into the current settings, can really be I would say that the mill manager and the energy manager of the paper mill, they can understand exactly where does it fit, how does it look like, and how can make a big change while not losing the size of something which is totally new and unknown. So I think this is something that I think it's crucial because we have very short time horizon for delivering and even short time horizon for deploying. So unleashing the potential of innovation, which is breakthrough, as Christian was saying, it's absolutely crucial. But if we manage even to make it sure that we can fit into what we have already today, so that people can have the mental image of how does it look like and work it out, I think that would extremely shorten up the timing for investments, because we're talking about industries with high capex expenditures. So there is an embedded risk adverse for trying something new. You might want to be maybe not the first, but maybe the second, even better the third. But if there is an understanding of what does that look like, then I think it's crucial that this is going into the picture and into the mind of where it needs to be next, so that it can prepare accordingly. Now, my last introduction remarks go into the presentation that Christian did at the beginning. I mean, I think it's important we get this call up and running. We are in a learning phase. It's a learning by doing. So I think now we've been working out all the details. I think it's important that we get it up and running. So I think it's no comment from my side on the parameters in itself. I think that we got it right, at least from the knowledge we have. So this, and I am listening to what Christian said about the first call. I really hope that the next call is going to beat even the first one when it comes to the interest from participants. The specific encourage activities, that's where I feel a bit smiling from a sectorial perspective, because we are a sector that is built around the concept of trees which are directly capturing CO2 at zero cost. And obviously zero cost, and then we are using this in embedded carbon, which is used in more and more products, and we are developing around the circular bioeconomy new solutions which are really needed to avoid emissions to be released in the first place. and our products are by default during the lifetime they're carbon negative because once they dispose then they become carbon neutral. So I don't know which box we would tick as a sector. We will certainly go into the substitute products, but in a way we are. I feel that we are ticking all the boxes. So I think we are really looking forward to see how our members react in applying for this fund. I'll leave it here. I'm happy to continue the discussion afterwards. Thank you.
Thank you, Nicola. This was a very, very nice insight from industry. It's very nice to hear that the projects in the pulp and paper sector can be small but beautiful, and actually delivering significant greenhouse gas emissions while being profitable. And it's also encouraging to hear the engagement of industry and that you are already preparing some projects. I liked also your view on this mental image. So the need to share lessons, to share information. I think we will get there when we will be discussing probably how can we create a community of people around small-scale projects, investors, industry, because I think there is a lot to learn. And this is also the principle we are taking in the Innovation Fund. This is also learning by doing process. So thank you very much for your inputs. Now let's move to the investment side, to the funding side, and we've heard from Christian on the grants from the Innovation Fund. Let's move to France, to Nicola, and see how Adem Investissement, as a public equity investor, in fact, is doing this support in the sectors that you are covering. Nicola, please.
Thank you, Christian, for your presentation. I'm very pleased to join you for this important discussion. I wanted to give a few preliminary element of context, if I may. Firstly, climate change is an urgent matter to tackle, and we need to accelerate the innovation phase, as I understand that a great part of the decarbonization of our economy will be done by technologies not already commercialized. Therefore, we don't have 20 years to make breakthrough climate-friendly technology enter the market like we had for the solar and the wind sectors. This is an important. There is an important role for the public sector to catalyze private investment in the scale-up, because the public sector won't be able to do the job on its own, actually, and also the private investment must provide the scale. But also, not many venture capital funds are dedicated to clean tech, and they are operating across a wide spectrum of technologies and businesses. And of course, it's remained quite challenging to attract private capital and directly into technology development. Small-scale innovative projects can play a key role in driving low-carbon development. However, obtaining adequate financing for small-scale projects can be a major challenge. Because there are still non-technical factors that act as barrier to their large-scale implementation, among which the lack of financing product for small-scale investment and small-scale project find it sometimes difficult to access to main fundings and financing sources because there are limited awareness of what the financial market offers, sometimes not very interesting to banks and to infrastructure funds. Too small to be relevant or not enough mature technology. But we obviously welcome this the program, because now we have you are designing financial instruments to facilitate financial support dedicated to small scale projects. Of course, we have the crowdfunding, the venture philanthropy, and specific national and EU programs such as the EIC and the Innovation Fund. Another critical point is the cost efficiency, because we have already many innovative technologies, but they are very expensive. So there is a crucial point on for the scale up, and the demand should be there. Another point would be that we have to take into consideration clean tech in the whole value chain, where the road to market is long, and we need to support the entire ecosystem to move to make the technology viable. And the hydrogen industry is a very good example for that. Regarding my reaction to the presentation of Christian for the design of the call, I feel it's very important to have a simplified monitoring, reporting, and verification plan regarding GHG emissions, with a streamlined methodology for GHG calculation in order to reduce cost transactions. In this regard, it's very much appreciated that through the Innovation Fund program, you aim to set up new standards, particularly regarding the calculation of GHG emission avoidance and the calculation of the cost efficiency of the clean tech. Project developers in recognized sectors may save themselves time and effort by using these baselines, and such top-down baseline may be also extremely valuable in sectors likely to see similar projects, and will be great benefit to smaller project developers and also to the private sector in general. There is a specific need for project development assistance. Innovative energy investments come with high level of complexity in their project structure, development, and promoter first mover profile. This is detectable by the lack of project implementation experience of the promoters, in combination with the challenging nature of the development phase, the volatile shareholder structure, the low permitting structure and readiness of the project, and the unstable regulatory frameworks. So for promising but not sufficiently mature project, there is a clear need for project development assistance to support investment preparation, project financing, and implementation. Compared to the previous large-scale call you did, I think it's a good idea that the design of this call, specifically for small-scale project, is designed also to make a higher emphasis of the degree of novelty of the technology and the proof of pilot customers. It's also important to avoid any overlap between different EU support tools, notably under the ICE and the Innovation Fund, to give a coherent framework to the applicant, particularly for small-scale projects. Regarding the selection procedure, I would probably recommend to introduce an interview session face-to-face with pre-selecting candidates in the design of the call, particularly if there are startups that the project rely on the team. It would be a great opportunity to challenge the management team, their capacity to work together and implement the proposed project, and to check their motivation. I also find it a good idea to devise the grant disbursement to give incentive to make sure that there are real emission avoidance. On the other hand, I understand that the 60% payment should be refunded if the promised emission reduction are not there. In any case, it's clear that for certain projects, the intervention of the Innovation Fund will give a strong and clear signal and push for us to step in the project. Switching to policy recommendation and to ensure that small-scale projects take off and reach the market, policymakers can publish regular calls to identify the need at national and at EU level. It's also important to have predictable regulations. It's a very important point to highlight. And the advisory component is a key part, because we need good project. It can be done through technical assistance in the project preparation in order to reduce their costs, but also by helping startups and SMEs to protect their innovation, find partners by creating an ecosystem of innovative entrepreneurs, and provide advisory support services, as well as organizing coaching events. Public institutions may also tailor their intervention to the need of the project developer, and, for instance, maximizing financing tools such as early stage financing through grants, credit line, mezzanine debt facilities, guarantees, or equity financing. So to wrap up, we need patience, because the return most of the time uncertain, and we need investors that have a long-term view and may probably have less short-term return expectations. I would rephrase what other experts say to define a conceptual framework for innovation, which I think is true, is think big, start small, and scale fast. It is important to identify the weaknesses in skills, in product capabilities of the team, and then start a number of small experimental-oriented projects to learn and to understand the weak points. It appears necessary to begin with small testable product and small testable prototype. For those small-scale projects, it's necessary to develop the ability to scale up the prototype into a demonstrator and the first commercial, and get market share and create new market. And finally, coming back to encourage activities, I'm personally in favor of encourage activity. If economists, engineers, policymakers collectively estimate that the best way for the EU to become climate neutral by 2050 and respect our commitment under the Paris Agreement is to tackle specific sectors such as decarbonizing the power sector, the energy-intensive industry, using circular economy. Let's go for it. Indeed, energy-intensive industries such as steel, chemicals, cement are indispensable to Europe's economy, and the decarbonization and modernization of the sectors is essential. On the other hand, we encounter numerous digital transformation projects which may appear less CapEx-intensive, such as artificial intelligence tool, machine learning, big data, that will have also a significant impact in the decarbonization of our economy, as well as other key sectors such as the smart mobility, agriculture, and the use of efficient resources for the construction and renovation of buildings. On ADEME investment side, we decided not to encourage specific activities, and we tackle all the spectrum of the energy transition regardless the sector. But in any case, all should keep in mind that this encouraged activity should ensure affordable energy for consumer, increase the security of the energy supply, reduce our dependency on energy imports, and create new jobs. So it sounds simple, but it's extraordinarily complex.
Thank you, Nicola.
I give you back the floor.
Yeah, thank you, Nicola, for your insights. I think it's really good overview of issues that you mentioned. I'm very happy to see that you also subscribe under this idea of encouraged activities and the need for the patient capital. You're highlighting the importance of these non-technical factors. I think we will get there in the discussion, and I think all these elements are kind of reflected in the design of the call. And also very happy to hear that as a public funder, you are keen to chip in and join forces. And I think we will have a chance to discuss this a bit later. Now, in view of time, let's move to the next speaker, and let's move to the private sector. And Rob, please, what is your take?
For this opportunity. So Capricorn Partners is a venture capital management firm. We have 5 funds in venture capital and 3 funds in listed capital. I work in the sustainable chemistry team. So we look at the chemistry, and chemistry has a lot of overlap with energy. The chemical world is quite resource and energy intensive. So we see a lot of projects. As Capricorn, we evaluate probably in our team about 500 potential investors per year, which have a chemistry focus. As a company, we also have a digital growth fund where we see around 1,000 proposals a year, and a lot of them are also related to energy and energy management. I would like to thank Nicola because he gave a very structured overview, so I don't have to do that. So I can go more to some responsive remarks about the call and how we view that as venture capital. So first of all, I did my first investment in clean tech in 2008. At that time, we were setting up a company to create bio-crude from biomass. It was called Kior, and we had to go to the US to find funds. In Europe, there was nothing to find. And now in 2020, I'm very, very encouraged by the Commission and also the national funding programs that we now have along the member states for a large variety of instruments and support in this sector. So I'm very positive about that today. In this call for small-scale projects, I think it's an excellent initiative. I do wish that the fund size was larger, because with 100 million and 7.5 million at 60%, you can fund 20-25 projects. And I wish that such a fund would become evergreen. Because as a venture capitalist, the money we spend in our portfolio companies, we call it burn rate for a reason, because time is of the essence. Every month that you don't progress is a lost month. That's very different from corporates, where the business will continue despite not doing any innovation, at least for a while. So that is something I would like to give back to Roman to consider whether we could create such a fund. Because now you have to time with your portfolio company when you can apply for this call, and it may just not completely fit with your project at hand. So you may miss some very good opportunities because of that. But that is something to do. The other thing is this type of capital support is very good for the small-scale projects. What I would encourage in the evaluation is when you look at scalability, consider modularity. I'm also a private investor in some water treatment companies, and one thing the water industry does is make everything modular. And people in the chemical industry have this dogmatic approach that when we scale, you scale by volume, because that's what we've always done in the chemical industry. And modularity is not really in there, and in the energy industry, it's now coming in the energy industry because of the fuel cells. But modularity creates a huge cost down on your manufacturing curve, because you only have to design once, you do some improvements, and then you can multiply. And multiplication goes much faster and has a much lower technology risk in the scaling phase. These small-scale projects are great because you can use them to demonstrate critical steps in your process or get critical customers to approve the product. In the chemical world, if you make a new chemical for polymer applications, you have to go through large qualification steps. And if you go to food or feed ingredients, it takes quite some time. And typically they only want to do that, if you can produce products at scale, because these qualification processes can be quite expensive. So only when you can produce something at scale, the customer will go into it. And this type of capital support may break that conundrum that you're in. So that's all I want to say about that. We look at propositions from two perspectives. Does it relieve customer pain, or does it create customer gain? Because what we see in the market, if it relieves customer pain, it typically tends to go to cost. Because the customers like to see the pain go by the least amount of work or the easiest way. So, and I take water industry as an example, if I can pay for my disposal of my water, I am not going to bother with new technology. Unless that payment really starts to hurt me, or it becomes a license to operate issue. And that's something where I also encourage the Commission to look to go more hand in hand with regulatory steps when you look at evaluating these type of calls. On the other hand, customer gain projects, they are typically created around creating value. And longer term, they have a much greater value for society. So that's something to look at. We look at that in our portfolio evaluation. We look at it from the Sustainable Development Goal perspective. We have criteria that we invest only in companies that create a very strong and disruptive impact, step change in the Sustainable Development Goals in a few we select. But it cannot have a negative impact on another one. And that's also an important criteria, I think, to use. Because when it comes to reporting, if I start to look in our portfolio companies about the reporting requirements around ESG, around SDG, and now also around greenhouse gas emission avoidance, etc., you see different requirements on the European level, on the national level, but also in our case from our investors. And that starts to become a complicated nightmare, where I would like to see some standardization coming in. Diego made a good remark about avoid working with the corporates or large corporates because they have nothing to win. And that is definitely the case. Often what you see in these kind of calls is that people like to see a link to a larger organization or a corporate because they think that that's a validation of such a project. I like to say that that is total BS. You don't get it from there. You don't get the comfort from there because often what you see them doing, they calculate the project to death because if they would encourage it, they actually may have to do it. And they don't want to do that. So don't tie criteria to these type of either co-investors or partnerships. There's often also a clashing criteria. I've seen that now several times with calls in different grant programs, that they want to give you the call, they want to grant the subsidy to you, but then they ask for your financials and they say, whoa, you're not financially healthy. Well, an innovative company in an early stage typically has a negative equity value because they don't amortize the goodwill on the balance sheet, but there is a lot. They don't amortize the IP on the balance sheet, but there is a lot. And this is really a problem for some grants. In some of my water companies, I've been personally guaranteeing, certain support for grants. The banks don't play. That's another part that we have to think about in capital projects. The banks talk, but they don't do the walk. They don't take the walk. So also that is something for the Commission I like to include. But on the positive side, I'm very encouraged by this type of calls. I will have several of our portfolio companies very much looking into this, and we'll see the ones that get successful. Thank you.
Thanks a lot, Rob, and again, a very, very useful insight and feedback, which I think we will consider probably not immediately, but definitely step by step as we will evolve. I think an interesting proposition about this open call, which we have already thought about some time ago, and let's see also the results of this first call and how can we move forward. I hope we will do both, release the pain and increase the gain, and I think that's the objective for the Innovation Fund. Let's move now to our last panelist, to Alessandro from the EIB, and see how the EIB can help the projects on the ground. I think there were many issues raised where Alessandro can actually very nicely react and complement. Alessandro.
Yes, thank you, Roman. Good morning, everybody. Well, I would like to thank you to begin, Roman and Christian, for having invited me this morning. We are very happy to, to support this initiative on the product development assistance, which I will say a bit about with some more detail. Perhaps before I do that, I wish to say a little bit briefly about the IB. I mean, of course, I think most of you know the IB. So we're a public bank. So from this point of view, we are a patient bank. And we want to support policy goals, public policy goals, and obviously climate and innovation are at the top of our agenda. So the Innovation Fund is ticking two very important boxes for as far as we are concerned. We have, of course, a long-standing partnership with the European Commission. We have had the experience together of the NER 300 some years ago, where we've learned, I think, a lot, and we're very looking forward now on the Innovation Fund, which is larger and including energy-intensive industries and covering, I think, the full spectrum of the needs of the projects. So I think this is very good. So what does the EIB do? Well, of course, we're a bank, so the main thing we do is loans. Obviously, we have a number of financial products. The second thing we do, which we call blending, I mean, this is basically financial instruments, and many of these are actually together with the European Commission. we heard from Diego about the Innofin Energy demo projects, which is a risk-sharing instrument which is allowing us actually to take higher risk on projects on innovative technologies. So this is a good example, and of course the FC and the InvestEU that will soon come next year are other examples of instruments where it's allowing the IB to take more risks, if you like, and I think when we speak about innovation and small projects, certainly you need those kind of instruments. So the third thing we do is advisory. Okay, so I think the PDA actually is an example of that. But we're not new to this. I mean, it is part of our activity, our business, to support companies in advisory, not necessarily, targeting later an EIB loan. I think the advisory comes as independent. It will be very ring-fenced for the PDA, so for sure this will be a separate activity. But in general, I would say that the objective is to support promoters, both on technical advisory and financial advisory, and we can do this, throughout, if you like, the project implementation or development period. So from the stage where we are now, for example, so project close to market uptake, if you like, but then we can do it, in the run-up to financial close of a project, and even during the implementation and the operation. So we can cover, if you like, the full development cycle of projects. So I think this is important to know also for projects at perhaps later stages of the development. So specifically on the PDA, so what are we going to be doing here? So the evaluation itself will be done by the Commission through INEA. And as you saw from Christian's slides, there will be a number of projects that would be proposed for PDA. So basically there will be, let me call it, a long list of projects, and which will already determine in a way where are the areas that the PDA would be required. So this is where we come in, and what we will do, we will take these projects and we'll make, if you like, a short list. So we will select, the ones who, if you like, have the better chances, to become mature through the PDA support that we will be providing. Because the objective, as Christian mentioned, is that this project would be able then, at the next call or the call later, to apply again and pass the maturity hurdle, if you like. So how are we going to do that? Of course, we're going to do, a first screening of the project that come to us. And again, the criteria will be, what are the chances of improving the maturity through our support? And then once we have, finally awarded those projects, we will then have a direct relationship with the promoter, and we will define the areas where we can provide the support. This will be done both through our internal experts, so we will have a team fully dedicated to this activity, and we will rely as well on consultants. Okay, so there will be a mix depending on the needs, and this will cover a wide breadth of topics, so technical and financial. But I mean, just to be a bit more precise, it can be on the financial side. Are there other investors? I mean, what is the financial plan? What is the business plan? What is the management team? The governance? It was very interesting to see the Diego making that list of the multidimensional list. I would say that all of them are actually among the things we would potentially be supporting on if there's a need and a gap. On the technical side, of course, I mean, we expect project to have a strong technology idea, but then that they may still need some support on the fundamentals of that technology, and then on the implementation of the project, because you need then to have, project close to market uptake. So are contracts there? How are you going to sell the product? So the feasibility of the implementation, if you like, of the project. And then you will be looking also at the regulatory permitting aspects. Okay, so of course conscious of the fact that some of these will not be improvable, if you like, through the PDA because they will be related partly, if you like, to the processes that each national authority will have. But to the extent that the application for those permits can be improved through our assistance, we will cover those as well. So this is in a nutshell the PDA. Then obviously as a bank, we can also come in later to finance some of these projects. Once they have received the grants, and they will, as we saw, there will be need for more financing because the grants will not cover everything. And there, I want to be frank, so that the bank is not really fully geared towards this size of projects. So it will be more difficult to have a direct loan towards these projects. However, we have a number of instruments that we can put in place through financial intermediaries. So that it will depend pretty much also on what kind of risk level we are talking about. So if it is a debt kind of risk, so companies with some balance sheet where you can take a risk, and then this will finance through the banks. If we are in the venture capital area, we have, of course, the EIF that and is actually tailored to support that kind of project. They do it, however, through funds. So they're actually financing funds who target venture capital. Just to give a couple of examples. I close here, and thank you again, and look forward really to be involved in this very exciting initiative.
Thank you, Alessandro. Thank you for your feedback, and also for explaining how the project development assistance will be done by the EIB experts. I would now move to Christian, because he seems to be eager to respond to some of the questions that were raised, and I would just bundle them probably. There were a number of questions about the costs that are eligible, about the type of applicants, whether multi-sector projects can, for instance, be submitted, whether we can consider this open call or not, what will be the periodicity of calls. So probably you can shed some light on this, Christian.
Yes, thanks very much, Roman. Thank you to all of you for the very interesting discussion, sir. And what I like is a little bit also what I think we already managed also at the previous finance conference, is to bring together these different points of view from the industry, from the investors, from banks, from venture capitalists. And and I think this is what we need to manage, is to get all of us together. On some of the questions. Definition of capital cost. Capital expenditure. There we will follow the general accounting principles. Whatever is there defined as capital expenditure, we will accept. So there will be no additional requirements from our side. We of course welcome very much cross-sectoral projects. As I said, circular economy is a key topic, but we are open to every kind of project, as I already said before. We are also very open how you design your project. There was one question, is who should apply to the Innovation Fund? Is it rather, so to say, this pioneer customer? Is it the technology provider? Is it maybe the two of them together? Whatever you want, whatever fits your structure, your relationship. So there, we are very open. It just must make economic sense and be successful on the market in the end. we are also very keen, also responding to Rob's remark on the frequency of the calls. We are here for 10 years. This is now what I think what we can say for sure. So up to 2030. We want to do annual calls. We want to very much respond and also to the demand that we have. If we see that like the first call goes very well, we will try our best to immediately follow up with another call. So the basic idea is really that our second wave of calls would come second half of 21, so that we would launch them there. But of course, we also want to take into account then the experience we have from the first calls for large and small scale projects, and to already improve the design of the second wave of calls. To have a call that's always open, maybe that's from our procedures a bit more difficult, but let's look into this. What I'm always afraid of is not to over-engineer things. I think to have a call each year is for us in terms of procedure quite straightforward. So if this works also with the other players together, I think that would be for us a good way forward. But let's see. And I think we are very happy to cooperate with banks, with venture capitalists, and either you bring us the good projects, or you trust us that once we selected a project, that you find that of a quality signal, and then are more ready to invest into this. And I also very much agree is that we need to find a common assessment standards. Like we hope that we put out already a little bit there with our methodology how to calculate the greenhouse gas emission avoidance, as well as for the large-scale call with our methodology how to calculate additional costs that currently cannot be covered by the market. But whatever we can do, also with fora like this, to get to a better common understanding, what are the key issues that we need to look at to get these projects going, the better. And of course, I would hope that with the experience we gather, we can also then target the calls better. So maybe the call for large-scale projects will go more for corporates, for cooperation with also with banks, while maybe the call for small-scale projects could really develop into something that fits much better with venture capitalists. But let's see. I mean, we do this the first time, and we're very keen to learn from the first call. Roman.
Thank you, Christian. I think what you said is very, very interesting, because we've heard already about the options and possibilities to link the interests and financing of our partners, both from the private and public investor side. And I think we will very much like to encourage this. And I just received a question to Alessandro. So going forward, how would you, for instance, see the possibilities to use InvestEU for supporting the successful innovation fund projects further?
Yes, thank you, Roman. Yes, I mean, of course, I mentioned that instruments like InvestEU, and we are in the process now of discussing, if you like, all the products that we will have under InvestEU. And in principle, we can have dedicated products, risk-sharing products, which allow, if you like, the bank to take on that kind of risk, because obviously we could not do this with a simple loan product. Again, the challenge on our side will be the size. So here we're talking about projects below 7.5 million euro. So I think we need to have an InvestEU facility which we can use through a financial intermediary, if you like. So we have, for example, this MBILs, multi-beneficiary loans. So we have to think of something dedicated that has an appropriate risk sharing for this kind of facility. which is more, towards equity type kind of risk, and that allows us to, to finance through banks. But in principle, this is the kind of instrument that one could be looking at for these kind of projects.
Yes, thank you. So we have a couple of minutes left. So let me now come back to our panelists, to all of you. I think there's an interesting question coming from our audience, and probably many people thinking about submitting their project are asking this question. So what would you say, what would you propose to our audience? So how to start to find the right place, the right partner, the right client for an innovative project that we could support? What is your take on this one? And how can you help? Who wants to start? Rob, probably?
I can. Okay.
Start talking to people in the, I would say, early stage. If it's an early stage project, start talking to people in the early stage venture capital industry. They're all eager to hear your proposals. They're all eager to try to help and shape you. If it's a good company, even if it's not the stage that they invest in, they will try to get you on the right path. Venture capital does not invest in a point, they invest in a line. If they see you 2-3 times and they see your progress, they see your development, and it's in line with what you said you're going to do and you delivered on that, they get a lot more confidence, and then it's easier to find that. Start talking to your regional development offices. All across Europe now, regional development offices have been set up for economic stimulation, for finance. Do look also at different financing options. There's a lot of money available around you in these regional and national offices, as well as your local, I would say, venture capital community. And feel free to contact me if you want some connections.
Okay. Any other panelists wants to react? Baptiste, please.
Concur, of course. Good morning, everyone. I concur, of course, with Rob. You have to talk to people, but I'd come to us as well, because that's really our role, as Diego explained, to try and assess your project, support it through all angles possible, and help you also navigate with the EU offer, because the EU offer is excellent, but it's also very complex, and we can help you find certainly the good fit in the EU offer to support your project. And I seize the occasion of having the microphone here to compliment the Commission for this event, and for having set up a small scale call, which is as it is designed, as you've disclosed that, I think a very, very good effort to try and simplify access to finance for a first of a kind demo project for a small project. I think it would be very, very beneficial. Thanks a lot.
Thank you, Baptiste. Anyone else? Nicola, please.
Yes, thank you. I hope you can see me as well, because I'm having some video problems, but
yes,
at least you can hear me. Okay, good. I just wanted to say, just to concur on what was said before, from the industrial side, we often have the difficulties in understanding what is happening around us, which sometimes goes beyond the known territory. So at least from our side, as of the beginning of this year, we have set up something that we called internally the Energy Solutions Forum, where we are basically opening up a discussion with anybody who has ideas to help us in decarbonizing, to come talk to us so that we can work together and let them better understand our sector, let us better understand what are the options out there, and try to help companies to get in contact with whoever has ideas and then try to accelerate this deployment. I'm sure other sectors are doing the same, but at least from my side, if you would like to get in contact with us, we'd be more than happy to have a conversation with you about all these options. Thank you.
Yeah, thank you, Nicola. This is certainly a very good proposal and offer. So please follow Nicola's advice. Nicola, any view from Adem Investissement on this? Where should people start? Can they contact you?
Yeah, of course. And it's all the aim of the creation of Adem Investment result from the fact that first-of-a-kind project need public funding at their residual risk from project not entirely mature. So we aim to overcome this financing difficulty, just like the Innovation Fund dedicated to the first commercial. So firstly, to support the implementation in France and abroad of innovative solutions developed or industrialized in France, and secondly, to leverage complementary private investment. So we just to say that we aim to co-finance infrastructure project. We're doing project finance, not corporate finance. We act as a minority shareholder from minimum equity stake of 3 million euro up to 40 million euro. And we target to be at around 40% of the round table. And we take action in all the spectrum of the energy ecological transition. So we can invest in France and abroad, mainly for the construction phase, but on case-by-case basis during the development phase. So we are very, I think, complementary to the intervention of the Innovation Fund through the encourage activities promoted by the fund and the moment of oriented investors. I think it's true that partners of project developers may find it difficult, for instance, to take on its own financial costs, heavy engineering studies such as front-end engineering design, for instance. So I'm very positive we could find a co-funding opportunities when the project has a strong impact in France and imply the financing and of an innovative full-scale installation. And of course, a key feature of the innovation should be that it should be scalable.
Okay.
Thank you very much.
Thank you, Nicola. And you also underlined this importance of linkage between the instruments. I think we have a very good offer that was just discussed. I'm afraid that our time is up, and this is unfortunate, but true. So it is my duty to thank all of you. Thank you very much to our speakers, Alessandro, Rob, Nicola, Diego, Baptiste, and Christian. Thanks very much for your insights. Thank you very much to the audience. I think we had a very active engagement today. We had more than 500 participants and received more than 100 questions. So I'm sure we have a material to ponder and think of and reflect upon. Thank a lot to my colleagues in DG Klima, Angelo, Melina, and the team who helped us to make this event possible. Many of your points raised, I guess this is just a start, and we will think further how this community can be created, how can we repeat similar activities in the future. I would just repeat that we are aiming at the launch of the call on the 1st of December, so please get your projects ready. We will close the call on the 10th of March. This is just the first teaser. And once we open the call on the 1st of December, there will be a series of events. So on the 9th of December, we are preparing a call-related event specifically, where we will explain the procedures, the documentation, etc. And then we will also come up with additional webinars early next year on more technical elements so that everybody has the information it needs to prepare the good project. The recording of this session will be available online on our website, also the video, so please go and follow us there. Any additional information that we will have will be published, so we are trying also to be very up to date. And all the call information, the application form, frequently asked questions, help desk, you will find everything on the funding and tenders portal once the call will be opened on the 1st of December. And please join us as evaluators. We are still open for good experts that will help us to analyze and evaluate the projects. So that will be all. Thank you very much again. Indeed, thank you for a very engaged discussion. We are looking forward to getting back to you soon. Stay safe, good luck, and enjoy the rest of the day. Bye-bye.
Thank you very much. I was happy to join the conference.